It's about that time of day again. My name is Joseph. It's already Thursday evening, June 29th. Welcome back to your nightly newsletter. We have crude oil, S&P, gold, euro, and DAX tonight. Crude is bearish with a spike and wedge, so we're looking for selling opportunities using prior swings overhead while keeping an eye on a possible reversal because of one big clue we saw from earlier on in today's session. The S&P is bearish and trying to retest today's low, but a key support level is standing in our way. So we're looking for selling opportunities to sell high with failures up in the battle zone tomorrow. Gold is bearish with a trading range, but a key level of support is telling us the only real option is to look for failures up inside the battle zone with a clear window of opportunity for the bulls to take control tomorrow. The euro is bearish and trying to reach that 15,000 round number tomorrow, but we have a major resistance level getting in the way, so we're looking for a two-legged pullback off the high to avoid buying into this key level of resistance. And of course, don't forget about the FDAX. The DAX is bearish with a spike in channel, big move down on the DAX in today's session. So we're staying patient, trying to avoid selling low. We're looking for traps and failures up inside the battle zone resistance tomorrow for retest of today's low. We are ready to wrap up an awesome week of trading tomorrow morning ahead of the holiday weekend. We get the 4th of July Independence Day coming up next Tuesday. Big, long, extended holiday weekend just around the corner. And of course, as always, I'm not on holiday yet. I got another great newsletter in store for you guys and gals tonight. Plenty of big trading opportunities setting up for tomorrow. Got a great plan of attack. We got some news to cover here tomorrow morning. Before we jump in and put the plan together, I want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that video. Follow that link and come join me on the blog here at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when the newsletter goes live. Follow me on social, StockTwits, Twitter, Facebook, LinkedIn. Pick whatever flavor you like the most and follow me throughout the week. I'm always posting important charts, links, and updates there on my social media channels. Don't forget to grab those charts. Be ready for tomorrow's session. Right where it says click here to download today's charts. How easy is that? Have all the charts from tonight's video on your computer for tomorrow. And you got to grab that free pass. If you're not an advanced member here at School of Trade, make sure you grab that free pass because you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And remember, I'm always here standing by. I'm not a robot. I know most websites are all automated, pre-recorded webinars these days. I will answer the phone. I will pick up that call when you guys call here, so please feel free to use the live support on the right-hand side of the website. Boy, has it been a great month of June. It's been a typical summertime month. Get to it early, get out of there early, right? But I'll tell you, definitely tradable if you have the right plan. And we're ready to wrap this month of June up tomorrow. Last day of the month, last day of the week. You know what I always tell you guys, at the end of the day, at the end of the week, at the end of the month, what happens? Traders take bigger risks, right? It's a psychological condition us human beings suffer from, right? We start thinking, well, we made some money this month. I can be a little bit loosey-goosey on the rules, or maybe I lost a bunch of money this month and now I got to make it back. Whatever the situation is, end of the day, end of the week, end of the month, we always start seeing the risk factor get kicked up. We're also expected, of course, at the end of the month, always expected to see that volatility start to kick into gear. We've seen a lot of volatility this week on a little bit lower volume. I'm sure many of you have noticed that as well. And remember, on Friday mornings, it's always early in, early out, because again, end of the week, we start seeing traders take bigger risks. So Friday morning, always a big deal, early in, early out. Anything after 11 o'clock Eastern time on Friday, you better have a good reason for getting to that trade, grab that money, hit the weekend. And of course, tomorrow being a Friday is also the end of the week and the end of the month. So be aware of that. Now, with that said, tomorrow morning, we do have some news coming out on the overnight session here. Yep, all the way down there at 9 p.m. from our good friends in China, right? Don't forget about the 9 o'clock and the overnight session, obviously, right? To the overnight Asian session, be aware of that from China. Tomorrow, everything's pretty much stacked up early in the session. We get the GDP, we get the flash, and of course, we get the personal income. The big deal tomorrow in the U.S. session will probably be that personal income number at 8:30 a.m. Eastern time. So with all the news early, stacked up early tomorrow morning, I would recommend after 10 a.m. tomorrow morning. You know, this ain't your average Friday. It's a Friday at the end of the month as well, and it's ahead of a big holiday weekend. So I would imagine we're probably going to see that 10 o'clock shock, that 10 o'clock, big round number at 10 a.m., and then watch to see how the volume reacts afterwards. If I had to guess, I would guess tomorrow is going to be a relatively early in, early out scenario. I'm sure I can, if I open my windows here in the office, probably hear probably smell the barbecue getting warmed up here in my neighbor's house a couple doors down, right? So it's definitely getting about that time of the week here. We start thinking about the holiday weekend coming around. So I would imagine traders will have work to do tomorrow, but once they make their profit early, I would imagine you're going to see them taking off, right, and hitting the car or hitting the beach or hitting wherever the hell they're going, right, for the big holiday weekend. Make sure you guys come back and see me with all your fingers and toes, right? Have fun, but be responsible this weekend, right, as you guys come back. Our next newsletter will be next Wednesday, all right? So I know they'll let me out of my cage every once in a while in this office. I got some great family in town. We do some work here over the weekend for you guys here at School of Trade. But the bottom line is the next newsletter will be next Wednesday, right? Monday and Tuesday. Markets are open tomorrow, Monday and Tuesday. Tomorrow I would expect to be a half day. Monday will probably be I don't want to say decent day, but considering the situation, it'll probably be the best of the 3 days. And then Tuesday, I believe it's an official half day. I believe bond markets are closed early. I believe the equities are closing earlier on Tuesday. But the markets are open tomorrow, Monday, and Tuesday. But I do want you to promise me be very, very careful because we are expecting the volume to be lower. I'm expecting only people who need to trade will be trading on Monday and Tuesday, which means get to it early when the volume is at its highest. And again, be back here on Wednesday night, right, with our next nightly newsletter. All right, enough about that. Let's jump into some charts here. We got a big day tomorrow. We're going to try to pad that account, try to finish up a great month of June. Crude is bearish with the spike and wedge and trying to retest the prior month and complete a measured move tomorrow. The spike and wedge tells us to look for selling opportunities up above the prior swings while avoiding the fake out breakout at the completion of that triangle or that wedge. Now, one thing that stands out on this chart is that we're trading at the day's lows. And the candlestick wicks are telling us to watch the buyers for strength tomorrow and a possible reversal, right, and a retest of the high if those sellers can't hold. So really the most important clues we're seeing on the chart right now is strong move down off the high into a triangle. You could also, I would not argue with you if you said this was a spike in channel as well. I wouldn't argue with a spike in channel on that either, right? The big deal here though is you can see the rotation just fits a lot better for that triangle. That's a big deal because that triangle gives us a key level of support at 44.65. So as we want to go up and sell that back down, we just be careful selling lower, right? That would be the big difference between a spike and wedge, right, and a spike in channel. If we saw this as a spike in channel, then there really wouldn't be any support down there, right? It would just be that measured move, the target. But because I'm looking at this as a spike in triangle or a spike in wedge, as I'll call it, it just looks like that's the rotation. It looks like they're getting that rotation inside. They trapping high right now. So I'm going to go with a spike and wedge, spike and triangle on this. And really what that tells us is look at those prior levels of resistance, right? Find those swings. I've got it marked up here as the battle zone. And we want to get this price up and then back down to retest that low. There are a couple different scenarios I'm looking for, right, to accomplish that. The most reliable here, right, will be trap high above that 97, right? Trap high. Also think of this as a buyer failure back down. And then, of course, one of my favorites is always that two-legged correction. Always one of my favorites, right? That two-legged correction, trend line up and back down as well. So be watching for the proper entry trigger. Remember, we're not just blindly selling at the battle zone, right? We don't just blindly sell or buy anytime, right? We always wait for the proper pattern and the proper entry trigger on the faster time frame. So with that said, up in that battle zone and back down. Got to be careful though, because we have support waiting for us down at 44.65. So up and back down. Now, what if we go up and then we roll right on through? What's the plan down there, right? What's the plan down there? Breakdown. We don't want to sell low because we got that measured move target waiting for us below. Breakdown. Don't sell low. Whenever I say beware selling low, what's the first thing that goes to your mind? trap high, right? Trap high, right? Yeah. If you watch my newsletter, you know what I'm talking about. Trap high and then back down. So that's the plan. If it rolls through that 65, again, we get the prior month low, we get the measured move. These will definitely be long-term targets for us, or I should say medium-term targets for us tomorrow, right? And of course, looking to get down strong and then up trap high, so we're not selling low from there. Now, how about the bull side? Well, I would be remiss if I didn't address this very big clue on the chart here today, and that is, you'll know, of course, when the buyers had control this morning, right? Buyers had control this morning. Well, it was a multi-directional, right, channel. Buyers up, sellers down, buyers up, sellers down. A very, very unique situation with that. Always love it when we see a big wide channel like that. Great example of that. The bottom line, though, is the buyers, of course, when the buyers fail up here later in the session, they run right back down, to retest today's low. Now, look at these wicks, right? Look at these wicks. Look at these wicks. Now, these wicks obviously help create this triangle, but those wicks are really, really big clues. Look at this area here. We really didn't see a very strong move through today's low. The bears do have control as it runs lower, but I'll tell you, that's a really big clue. What that basically means is this may be seen as a two-try rule, right? Once, twice, and this could be a springboard now for price to go back up and retest that high. In that case, think of this now as one big trading range. Go from the low to the high, high to the low, and then right, low back up to that high again. What does that look like, by the way? Well, first of all, it'd be a strong move up, and then rather than the buyers failing at the moving average, right, the buyers would hold the pullback, and now we're bullish. Once we see that, right, those buyers hold the pullback, now, of course, looking for pullback successful. We're looking for failures successful, right? We're looking for two-legged pullbacks, which are, by the way, the most common, right, when a market turns directions, right? Two-legged pullbacks. Be watching to see maybe we get a hidden channel here, right? Maybe a hidden channel here we can use, right, to buy that dip. You know, so we'll look to buy low, but remember, it's a bear market right now. We're waiting to see if these buyers want to take this price higher, right? And don't forget, as we go into the end of the week, prior week levels are magnets, end of the month, prior month levels are magnets. So really the way it's looking right now is the sellers have control, but again, those big wicks at the bottom there really aren't giving us a slam dunk to the downside. So we're definitely watching to see what happens in the short term if these buyers can take control. Who knows? By the time we come out in London and early U.S. session tomorrow, we might be bullish, running right back up to that prior week high. And again, up, right, trap, and then back down, right? Anytime we go into a major objective like that, don't buy high, right? Anytime you find yourself having to buy into those levels of resistance, look for those traps, look for those two-legged pullbacks. Just don't buy the pullback, right, into that level of resistance. Great chart there on the crude. Let's keep rolling. How about some S&P? The Emini is bearish and trading with a channel which is looking to retest the low tomorrow. But the prior month high will likely cause some problems. This move back above the moving average isn't quite strong enough to be considered a trend reversal. So the plan is to look for traps and failures up inside that battle zone so we don't need to sell into the prior month high. Now, of course, we always want to keep an eye on a possible reversal, which requires the buyers to show more proof on strength and then hold a pullback for a move back up, right, to retest today's highs. Now, obviously the first thing we see in this chart is that prior month level. We've been talking about this all week. We knew that the prior month high, prior month highs, prior month lows, these are always great price magnets. They make for great targets as we go into the last few days of the month. So in all reality, we may spend a lot of time tomorrow going back and forth around that number tomorrow. It's a little bit tough to tell what's going to happen. The really big clue on this chart is just the tremendous amount of strength this market pounding lower here. What is really interesting is they really literally pulled back to the moving average once in the entire move down. So a very, very strong sell-off. I'm not worried about measured moves. I'm not worried about double downs. You know that anytime market moves that far, that fast, the sellers have one goal, and that is to retest that low at that 24.02 and a quarter. It'll probably slide through down to that 2400 big round number. Now, how we get there is going to be a bit of a challenge because that prior month high is probably going to cause a little bit of analysis paralysis like a big round number would. So most important thing is those sellers have one goal right now, and that is to get back down, right, to retest that low. And what you'll probably end up seeing is, think about it this way, the reward right here is not. Boy, guys, what a great week we've had. We're wrapping up a great week, wrapping up a great month of June. Hope you guys learned a ton with me on this nightly newsletter this month of June. I hope you guys shared this information with a bunch of trading buddies of yours, right? That way everybody can profit right along with us each month. And don't forget, if you want to learn more about the trading strategies that we teach to all of our students, please don't forget to join that free trial on the homepage of the website. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video. Follow that link over to the website at schooloftrade.com and join our free trial to learn more about our beginner, intermediate, and advanced levels of membership. Guys, don't forget, I'm always here to answer your questions. I got some family in town for the holiday weekend, but I will be available if anybody has any questions. My email address is jj@schooloftrade.com. If you call the toll-free number at the bottom of this webpage, I will always pick up the phone, or you can always use live support on the right-hand side of the website as well. Have a wonderful, wonderful holiday. Enjoy the time away from the desk, right? Be well out there. Be nice to each other this weekend, all right? Come back with all your fingers and toes, and I'm excited for an awesome opportunity for the month of July. I'll see you guys on Wednesday, next newsletter on Wednesday evening. If you got any questions, you know where to reach me. Adios, amigos. Bye-bye for now.